Hey everybody, welcome back to another edition of Stock Talk Saturday with WhiteBoard Finance. I'm glad everyone could make it. The number of users that have been attending these live talks have just been increasing up and up week after week, so it's great to see everybody here. So let me just get right into it, you guys. So I'm going to pull up my browser here, that way you can see what I'm seeing. And I just wanted to go over a couple of quick pieces of news here just to get right into it. So we have here that Sears is announcing more store closures. So if you remember, about 3 or 4 weeks ago, I made a video about Sears filing for bankruptcy, and they'd be closing a number of stores over the next couple of months and also throughout 2019. So here we have a new piece of news that came out yesterday. They plan on closing another 40 stores early next year, and I think they've been planning on closing these stores, it feels like, for 20 years now. So I feel pretty bad. I have a real close friend of mine who's actually a manager at Sears, and he's been a general manager there for a number of years, and I just hope that one of his locations doesn't close, because I don't want his job to be in jeopardy. He's got a wife and some kids, so you may read this on the news, but this really affects real people, you guys. So let me check in here on the stream. Let's see who's joining us live. We got Casey Israel saying, I made it today. What's up, Casey? How you doing, buddy? Nice to see you here. Thanks for joining us. Big Luke, first time here. Thanks so much for joining me, Big Luke. I really appreciate it. I know I say this pretty much every Saturday, but I noticed that we have new people coming in. We have, people that have been coming every week, and I just really appreciate your guys' support. It's good to see people joining, interacting, getting in on the chat. Matt Taylor, there you go, perfect example. My buddy Matt Taylor from across the pond. He always joins every Saturday. I really appreciate that. If you guys think a different time, maybe Sunday evenings would be better for these, let me know. I think that Saturdays are great just because it's noon. I know people are doing their errands. I get it. But, I'm in East Coast time. It's 12 p.m. noon right now. And we got people from the West Coast joining us at 9 in the morning. We got people in Central Time. It's 11 a.m. And we also have people across the pond, like in England, for example. I believe they're 5 hours ahead, and Europe is 6 hours ahead. Mark Noldy says, hey there. How you doing, Mark? Nice to see you. Flora Wu, how you doing? Good morning. Thank you for joining us, Flora. I really appreciate it. So to get back into it, let me pull up my screen here. 1 second, please. So yeah, just to touch base on this, you guys may read these headlines like Sears announces, these store closings, and their stock is, filing bankruptcy, or the company's filed bankruptcy, excuse me. These are real people, you guys. So if you see here on October 15th, that's actually when I made that video, and they plan on closing roughly 700 Sears and Kmart stores in operation. Sorry, they're not closing 700. There are currently 700, and they're announcing, I think, the closings of, 120 or 140 stores across the board. So just the next piece of news that I wanted to touch base on here was the energizing move by Coca-Cola. So Coca-Cola actually plans on launching 2 energy drink products with caffeine from natural sources and guarana extract. So they're actually doing one with sugar and without sugar. I know a lot of people are kind of on the health kick that, they don't like sugar, they don't consume sugar. I'm actually one of them. I mean, I definitely consume sugar, don't get me wrong. I love dessert. If you guys follow me on Instagram, I was making creme brulee last night with the blowtorch. It was actually pretty fun. My wife and I were doing that. So I know a lot of people are getting on the no sugar kicks. I think that's why they're having the Coca-Cola Energy no sugar option. I don't know how I feel about this, you guys. I think people are trying to get away from, sugar, and whether it has sugar, whether it's fake sugar like the aspartame or sucralose or whatever, people are trying to get away from that stuff. But at the same time, I feel like a lot of Americans are, overworked and underslept. So yeah, they feel like they need their coffee, they need their Energizer drinks. So we'll see. I mean, I don't own any Coca-Cola. I don't own any Pepsi either, but I just thought that a lot of my viewers do, and I thought it would be a good idea to bring this up. So let's go back here. Let me see if anyone else has joined us. Okay, yeah, we got a couple new people. Hey, Keith says, hey, how you doing, Keith? Or hey, Keith, I should say. Fanazador, first time here. Hey there, how you doing, Fanazador? Thank you for joining us. Sherry Lee, good morning from Alberta. I'm assuming Alberta, Canada. Thank you for joining. I appreciate it. Big Luke says, I think kale will bust. I'm even diabetic. Okay, so there's a perspective from someone whose sugar affects them daily. Hey, Keith says, what do you guys think about Netflix versus Disney? I shorted Netflix and bought more Disney. Well, yeah, Netflix definitely popped off, especially with their earnings reports a couple weeks ago, and Disney's going through the roof. So that's a good starting point for this conversation. Let me pull up my screen here. Okay. Let's pull up Google Finance. Let's see what Netflix and Disney are doing, just because I know a lot of my viewers hold both those positions. So Netflix, yeah, obviously has been kind of down since their earnings, but they peaked, you can see here, about 2-3 weeks ago at 364, and it's kind of been downhill from there. This may have been a good buying opportunity, but yeah, I mean, I don't know what caused such a big decline. I have not been following Netflix, but yeah, you can see here that it's been down, a significant amount since the peak here from earnings season. Earlier in the year, around July, they're actually almost at $420 per share. So maybe you guys can enlighten me. Why do you think Netflix has actually been in the downturn here? And let's compare that to Disney. I know Disney, I'm a big fan of Disney. They pay a nice little dividend. It's not the biggest in the world. You can see here it's 1.42%. But I think that's because the stock has been doing pretty well here over the past month. So Disney's almost at a 52-week high, as you can see here. The 52-week high seems to be 118, or actually it's 120.20, but that happened just recently in October. So yeah, Disney's on fire. Why do you think that is, you guys? Do you think it's because of all the different, Star Wars franchises? Do you think it's their resorts? Do you think it's their shows? I know they own, ESPN, and that whole Disney network is pretty influential. But I'd like to hear your opinion on that as well. So let me flip back to my big face here, and I'm going to go back to the chat. Let's see what we got here. So yeah, the chats are really coming in here, you guys. This is awesome. So let's see here. Baby, become a better you. Looking sharp, my sir. Hair is getting long. Yeah, it needs to be cut. I like my hair long, but actually, excuse me, I should say my wife likes my hair long, but I like it when it's short. It's a lot easier to clean after you get out of the shower, and it's easier to dry. Alberto Cruz, good morning, everyone. How you doing, Alberto? Nice to see you, buddy. Casey Israel, are we in a recession? So good question. My buddy, who is an equity research analyst for a pretty big firm here in Northeast Ohio, he thinks that we may even be in the early stages of a recession. So however you want to take that piece of information, he thinks that we could already be in a recession a few months into it. Recessions, I think everyone thinks of recessions as like 2008, 2009, where, everything's going to go down 30, 40, 50%. I don't think that is the case anymore, you guys. Sorry, my WhiteBoard Finance logo is outside of the TV. I don't think that's the case, you guys, just because there aren't that many bubbles being set up like there were in 2007, 2006. That bubble was tied to mortgages, which pretty much affected everyone in the United States that bought a house. Sorry, this camera is kind of annoying. If you guys look at like the lighting, it's picking up the lighting of these two windows behind me, so when I block it out, see how it gets nice and bright? But when I sit back here, it gets dark because it thinks it's bright. So I can actually cover this up with my hand, and you'll notice the screen getting a lot brighter. So I digress. But yeah, just going back to your question, are we in a recession? I mean, a recession is just defined as a pullback of a certain percent over a certain amount of time. I don't really see that because Q3 was insane, you guys. Q3 earnings they blew it out the roof. I think like 77% of companies actually reported above estimates or above their anticipated earnings. So the numbers are there, but who knows? With interest rates going up, I know businesses aren't borrowing as much. So that could be a very good question. Thank you, Casey. I appreciate that. Aravind Kumar, hello. Tomorrow's my birthday. I can get blessing from God, but blessing from a good person like you is a droplet in an ocean. Thank you, Aravind. Thank you for the kind words. Hey, happy birthday. I hope you have a happy, healthy, prosperous birthday. Remember, guys, money is just one small aspect of our lives. I hope you're healthy, and I hope you have family to enjoy your birthday with. So thank you for stopping by again. Doug Whitaker says, good afternoon. How you doing, Doug? Thanks for stopping by again, my friend. Waiting in Weed, good day, sir. How you doing? Nice to see you on the live stream. Big Luke says Coke should stick with, sorry, I lost my place here. Coke should stick with what they know. So that's a good question, or a good comment, excuse me. So Coke has a really big moat around their, fizzy, sugary, delicious drinks, right? Sometimes companies, they get spread too thin trying to acquire market share in different categories. Like Coke may not belong in, the energy drink category. I'm just talking off the top of my head. Obviously, it's a natural segue for them. But yeah, I think as people become more and more aware of how sugar really affects the body, I haven't drank pop in forever. I'll get it every once in a while if I'm at like a fast food place. I'll get it with a combo. But even then, I'm getting unsweetened teas. I'm getting things that don't have sugar in them just because, I think there was a lot of propaganda in the early 90s talking about how bad fat is for you. But sugar it's terrible for you guys. It's not meant to be consumed in large amounts because it doesn't really exist in nature in large amounts. But we're going off the financial topic here. I'm turning into like a live stream personal trainer, so sorry about that. So Waiting in Weeds says, good day, sir. Michael Clark, love the channel. Thank you, Michael. I really appreciate your support. I dropped a video this morning at 8:30 in the morning. It was the top 3 marijuana stocks for 2019. I brought on Aaron from Departures Capital. I brought on Rich from Rich TV Live, and I brought on Investing Hustler. Those are 3 good channels that you guys should follow if you're interested in marijuana stocks. I kind of took my finger off the pulse of the market, so I didn't really contribute too much in depth to that video, but I did pick Canopy, Aurora, and Planet 13. So go check those stocks out if you're interested in that sector, you guys. Disney and McDonald's have been on fire. Absolutely. So McDonald's, when I was a young buck, I had a big position in McDonald's just because I didn't really know how to invest. I was just investing in companies that were popular and that I actually knew about. So I had like Nike, McDonald's, companies like that. But I actually held on to McDonald's for a number of years. And not only do they pay great dividends, but they've consistently done well over the years, whether it's through a recession or not. So I don't know if I hold McDonald's any longer, but here's the shameless plug. I'm about to release The Informed Investor. It's my exclusive private stock market membership group, and I may actually show you a screenshot, you guys. It's going to be through the roof. Let me see if I can do this away without giving away the information within the group. I'll try and do that here in a second here. But yeah, we're going to have monthly live streams for all the members going over my personal portfolio. I'm going to show you every single trade that I make, when and why. I'm actually partnering with a friend who does equity research reports, and I'm purchasing that information from him. And I'm also contributing my own information. These equity research reports are going to be literally worth $1,500 and up, and you get one of those every month along with updates throughout the month within my membership group. So I noticed some other people have membership groups, but to be honest with you guys, those are going to be child's play compared to my membership group. I'm just not really seeing the value in those other ones. And I'm not hating on anybody else. I just know that my value is going to exceed everyone's expectations. It's going to go above and beyond. So let's see what we have here, you guys. Casey says my birthday was the 6th. Happy birthday, everybody. We got some, I think this is Scorpio. I think Scorpio is October, November. I know late November is Sagittarius. My birthday's in December, so if you want to send me any well wishes for December, I appreciate that. Flora Wu says, what do you think Apple will do? So good question. Apple's been kind of crappy over the past couple weeks. Let me pull up the FinViz here and I'll show you what I'm talking about. So that's actually teachable because that's where my course lives, or my membership group lives. Let's go to FinViz real quick and I'll show you Apple here over the past week. So to answer your question, Flora, Apple, I think, their marketing is excellent. I know their stock has been down over the past couple weeks, even though they beat earnings. So I don't know if I'm really buying that argument of their stock being down. Excuse me, I have 1 year pulled up. Let me do 1 month performance. So over the past month, you can see that Apple down here, they're down almost 5% over the past month. I know that with their earnings, they beat a lot of metrics, but they're also not releasing phone sales. So I don't know if that's a strategic, play for them. I don't know why they're doing that, but we'll see, you guys. I mean, Apple's a great company. They have a huge moat and they have really good marketing. I think their marketing is their moat, if that makes sense. But at the same time, I just, I don't buy that Apple is going to go down any more than it has. I know we may go into a recessionary period or a market correction, and obviously the tide will lower or raise all ships, Apple being one of them. But Apple's a great company, you guys. They make solid products, they have great marketing, and people just buy their phones for no reason. I have an Android, which I love, and I've been with Samsung since the Galaxy S3 or 4. I don't remember now. It's been about 5 years. But people blindly buy iPhones, whether it's the ecosystem, whether it's the quality of the phone, I don't know. People just tend to love them. So good question. But yeah, I don't think Apple's going to go down much further than it is right now, and this could even be a good buying opportunity. So people are wishing each other happy birthdays in the chat. I love to see that. Thanks. I love the community, you guys. So let's see here. We got... Sorry, this chat is like blowing up. I apologize for not being able to follow it. I'm trying to answer everyone's questions. Okay, so Aravind asks, if a PE ratio of a stock is 70, should I buy it or should I wait till it comes down to 20, or will it go above 100, or will it stay at 70 for 10 years? So that's a good question. If I knew the answer to that, I'd be Nostradamus and I'd have a crystal ball, but I don't. But I'm more of a value investor, so stocks that are with PEs of 100 or 70, those are most likely either like IPOs or startup companies, or stocks that are in a high growth sector, kind of like how Facebook was when it first IPO'd, and Netflix. Those have actually come down significantly since then. But my point is that if it's a huge growth company, maybe like Uber, for example, I know they're valued at like 120 billion or something crazy like that. Maybe when they IPO, or maybe because a lot of people are buying into them, their PE ratio is going to be high. So, obviously for the newer members or the people that are newer investors, PE ratio is simply your price to earnings ratio, and it's a good metric or a good calculation of how quote unquote expensive a stock is. So you have the price of the stock divided by the earnings of the company. So the price of the stock as a ratio to how much the company is actually bringing in revenue, if that makes sense. So it's kind of like a value metric, if you will. So Waiting in Weed says, what are your thoughts on the results of the midterms and its impact on the market? So I thought the results are what I thought they would be. They pretty much panned out to what I thought to myself. I'm not a big, I do follow politics personally, but I'm not going to bring that into the channel. But yeah, I think the impacts on the market, the day after, I think markets were up like 250 points, and they kind of cooled down a little bit just because of all the news with the interest rates with the Fed. So ultimately, people, how do I say this? It was almost like a stagnation period, or a period of low confidence in the market just because of politics affecting certain things. Like if you guys remember when Trump got elected, finance stocks went through the roof, or stocks in general went through the roof, because people knew that he was going to be pro-business, if that makes sense. So yeah, it's pretty much what I thought it would be. The big bucket of cold water was thrown onto that by the Fed. They showed that they're not going to slow down raising rates. They said they wouldn't raise rates for the next upcoming period, but everyone knows, that's inevitable. It's going to happen, you guys. So give me a second here. Let me just get a drink of water. I'm talking 100 miles an hour here, so I appreciate you guys bearing with me. So Disney will pull all of their contents from Netflix. This is Hey Keith saying this. Disney owns Fox, Hulu, Marvel, Star Wars, and they will have their own movie stream. So yeah, very good insight. I mentioned that a little bit earlier, but yeah, those are all big avenues of revenue for Disney. I will say, I don't know the affiliation still with ESPN, but I'm a sports guy. I have not watched ESPN since college. It's been about maybe 10 years. It's crazy saying that, but yeah, I graduated in December of 2010. Yeah, so it's been about 9 years since I've watched ESPN. It just turned too much into like a soap opera, too much drama, too much, just they're involving too much like politics and like policy in a sports channel. So I just thought I'd get that off my chest. I have no use for ESPN. And actually, I got rid of cable in 2013. I cut the cord in 2013. You should hold your hand there the whole time. Sales education is talking about me. So see how it gets brighter and the picture gets nicer? It's picking up this bright open window back here. So he's like, you should hold your hand there the whole time. Luke goes, sugar, yeah, sugar, no bueno. Lydia says, hello everyone, how you doing, Lydia? Nice to see you. You've been a regular viewer on these Saturday live streams. I really appreciate that. Aravind Kumar, difference between growth investment and value investment, which is better for the long term? So good question. I can tell that you've been doing your homework, Aravind. Thank you for that question. So, excuse me, I just had breakfast, or at lunch, excuse me. So yeah, the difference between growth and value investing and which one is better for the long term. I'm a believer in value investing just because that's been my philosophy ever since I really learned how to invest. I'm not talking when I was 18, 19. I'm talking in my early mid-20s is when I really started taking investing seriously. And that's when I started picking up really solid companies that were undervalued at the time. If you want to see my personal portfolio, I'm going to be launching the Informed Investor soon here, you guys. That's my private group. So to answer the second part of your question, Aravind, which is better for the long term? It depends on what kind of market we're in. So since the recession, from 08 and on up until now, it's been about 9-10 years. We've been in a growth market. We've been in a bull market. So growth stocks destroyed value stocks over that period. That's not to say that value stocks don't exist or you couldn't find good value pickups during that period. It's just that, investing in like a Vanguard growth ETF or investing in growth stocks like an Amazon, a Google, an Apple, or whatever, those reaped much better returns than just your typical value investing. So if you're looking at the big picture, like your whole life, investing 30, 40, 50 years, I'm a big believer in value investing. That's pretty much the main theme or the thesis of my group. But for the short term, or for at least for bull markets, definitely growth investing, I think, beats that any day of the week. So Lydia Santiago is talking to Doug. How you doing? Solid video this morning. Doug Politi. Oh, hey, how you doing, Doug? Thanks for joining. I didn't realize that was you. Yeah, thank you. I appreciate it. I feel like for some reason, you guys, my channel, I used to be getting like 60, 70, 80, 100 subscribers a day before I went through a period where I had to stop posting due to personal reasons. And man, now I'm not getting anywhere near the number of likes or comments or, views. I'm just noticing videos that used to do very well aren't doing as well. Maybe I just need to get the big momentum behind my channel again. So if you guys could just share or comment and like the videos, I really appreciate it, you guys. It helps me out a lot. I'm doing this all for free. Elizabeth Rose says, hey, how you doing? Thanks for joining us, Elizabeth. What would be the most important thing a total novice needs to know? Or what would be the one thing you would tell your younger self? I'm trying to be healthy too. You're awesome, by the way. Thank you so much, Elizabeth. I really appreciate the kind words. So if I had to go back, I'm 30 now. If I would have told my 18-year-old self when I started investing, it's don't go for the shiny object. That's what a lot of YouTube stock investing videos are about. We all know the big ones that they flip-flop on their commentary, and I'm buying Tesla, I'm buying GoPro, I'm doing this, I'm doing that. It's like that's not how you invest. At least that's not how I invest. If you're a swing trader or a day trader, maybe that's a different story. But to answer your question, Elizabeth, I would say the one thing I would tell my younger self is invest. First of all, get a good foundation, get a good solid base, create a mock portfolio, maybe for a few months, maybe for 6 months or a year. Trade companies that you would have traded with real money on paper. So just, use fake money, set up a portfolio. There's a million of them. You can use Yahoo. You can use a bunch of different platforms to create a portfolio where you're only trading, hypothetically. You're not using real money. So that's number one. Number two is don't go for the shiny object like, oh, Alibaba's doing great, Tesla's doing great. Don't go for all the popular stocks, you guys. You need to invest in companies that you understand what their business does. You need to understand their management. You need to understand their numbers, like their fundamentals. And that's when you can start investing in companies long term and realistically. So yeah, don't just go for the penny stocks and the stock of the month and all that stuff. Those are great, but you need to do your own research and do your own due diligence. Lydia says, I am a happy McDonald's shareholder. They hit new all-time highs yesterday. Absolutely. I'm loving it. McDonald's is a great stock. Elvis says, do you think Black Friday will help the stock market? that's just one day. That's kind of just a blip on the radar. Does it help sales numbers and revenue numbers? Absolutely. It's insane, especially in the United States. But yeah, it's one day out of the year. So does it help? Of course. But is it the biggest factor? I don't think so. Lydia says, I am a Scorpio too, best sign in the zodiac. I'm a Sagittarius. We're more fun, I think. I'm just kidding. I have no idea. So James McKinney, what's up, James? How you doing, buddy? Nice to see you back. I think GE will continue to fall. Board of directors and company culture is the issue. Absolutely. It's definitely old, white guy kind of a company, if you will. They want to blame the CEO, gave John Flannery enough time to take the blame, then ousted him. So, yeah, that's a good point. That's kind of like if you want to make the comparison to sports analogies or sports teams. You may have a general manager that's not happy with the coach, and not only does the general manager get fired, so does the coach, and you're just always in this rebuilding phase. So I live in Cleveland. I'm a Browns fan, so I can speak firsthand to the rebuilding phase and trusting the process. So very good point. Thank you for that, James. Doug Whitaker, Australian cannabis industry is a good time too also. Okay, so I haven't looked into many Australian cannabis stocks, but yeah, definitely, I don't know what the status of legalization is over there. I think it's illegal, but let us know if you know. Ervin says, what about banking and financial sector in the future? So yeah, finance stocks, with the rates going up every quarter, it seems like, yeah, I think financial stocks should be doing very well here, you guys. That's my prediction. But all it takes is one recession or one slowdown in the economy for banks to also feel that as well. So Elizabeth says you must be important because there are sure a bunch of Scorpios in here. Nice. Yeah, Doug agrees on the sports soap opera. That's exactly what I wanted to call it, just a soap opera, man. It's like so annoying. Rigo Fernandez, how you doing, Rigo? Nice to see you, my friend. Good morning from California. Thank you for joining us. Michael says, what do you think about Alibaba? So I actually recommended Alibaba as a stock to buy, I believe, in October. It could have been November, actually. Sorry, I'm getting all these videos confused. But yeah, I definitely recommended Alibaba. I think they're on a small pullback here because of the trade war. And I think that their stock is one that's it's solid. The fundamentals are solid. I think that they dominate e-commerce across the globe. They're definitely the top player in e-commerce. And I know that they're delving more into cloud computing. So the cloud is going to be huge, you guys. I used to work for a Microsoft reseller, and the cloud was all they preached. So the cloud will be inevitable within the next 1 to 5 years here. And it already is here for the most part. As you know, IBM just acquired Red Hat Solutions for $34 billion. So Ghost picks Cody. What's up? Hey, how you doing, Cody? Nice to see you, my friend. I'm with the 17-year-old. What do you wish you knew about stock market investing when you were a junior in high school? Well, when I was a junior in high school, I was also 17. I was too worried about, driving a car really fast and recklessly than stocks. No, I'm just kidding. I've always been interested in stocks. I've always read books about stocks. So to answer your question, what do you wish you knew about the market when I was 17? It's just not going for the shiny object syndrome. I know I already mentioned this, but it's a similar question. It's just because you're 17 or 18 and you're about to legally start trading, you're going to gravitate towards stocks or companies that It's like, oh, I wear Nike shoes, so I'm going to buy Nike just because I know the brand. Or, oh, I've seen Johnson & Johnson at the pharmacy or something along those lines. That's probably a bad example, but don't just invest in stocks that you hear about because it's like you see it every day in front of you, like, Nike or Apple or whatever. You really got to learn the basics and the foundation of investing. So I would say for a 17-year-old, as soon as that person that you're with actually becomes 18 or starts working and starts, earning an income, max out your Roth IRA. That's always my number one rule. If you max out your Roth IRA every year, especially starting at the age of 18, you will be a millionaire. That's almost, obviously there's no guarantees with investing, but you will be a millionaire by the time you're 62. So good question, Cody. I wish I could answer that a little bit better, but just know the foundations of investing. Don't just invest in things that you see because they're in front of you every day at the store, and max out your Roth IRA as soon as you can, preferably with a target fund. Lydia says the problem with growth stocks is that if the stock tanks, all the gains are gone and you only lock in the gains when you sell your shares. that's absolutely true. So that's why value investing and dividend investing, I really like it, because not only is there a lot of room for appreciation, with dividend stocks, you're always earning money. It's kind of like a monthly rent, you guys. So ultimately, even if the stock price goes down, the dividend yield is going up, and you're also making more money per share, hypothetically. Elvis, was that question directed to me or Marco? I don't want to be rude. Okay, yep, that's from an earlier chat. Is liquor company a good sector for the future? Well, those sin stocks like liquor companies and tobacco companies, they do well during recessions, because everyone's like, screw this, I'm fed up, I'm ready to go drink some alcohol. So it could be, it very well could be. Difference between industry PE ratio and sector PE ratio. Not sure what you're asking there, like maybe the average, if that's what you're asking. If I knew that off the top of my head, I'd be like a genius. So I don't know that. I apologize. So Noah, penny stocks are the way to go. I don't necessarily agree with that. That's not my style, but if that's been working for you, great. Keep it up. I will say that some marijuana stocks are considered penny stocks still, and there's some viable options there. So yeah, it's not necessarily terrible, but that's not the majority of my portfolio, if any of my portfolio. So I can't say that I recommend penny stocks. But if that's your cup of tea, then, good luck. Baby says, I'd say marijuana stocks will replace liquor in the long term. Liquor stocks or liquor throughout society, like as consumption. I mean, I wouldn't agree with that if you mean throughout society. There's way more people that drink alcohol than would ever consider, using marijuana. But stocks, in terms of performance, maybe you could have an argument there. I don't have an in-depth analysis or any qualitative analysis to verify that, but there could be an argument to be made there. James McKinney says, don't get discouraged by the lack of views and subscribers. Your content is top class. Thanks for responding to the GE comment. Happy to hear your input. I really appreciate that, James. I mean, I've been putting out these videos for a year now. I can't believe it's going to be a year literally next Saturday. It's going to be the 1-year anniversary. So I definitely want to make a video for that, just thanking everyone for being with me. Yeah, it's just discouraging, you guys, because don't get me wrong, this channel will live on for as long as I'm healthy and able to make these videos. I'm in it for the long haul. So if you want to be with me for the long haul, definitely subscribe. It's just frustrating when you see, such good growth when you first start, and then I had to take 5-6 months off due to multiple deaths in the family and vacationing and things like that, which I already made a video about this, so I'm not going to go into detail. But, it's frustrating because, you have all these views, all these, likes, all this positive feedback, then all of a sudden it kind of hits a wall and it's frustrating. But at the end of the day, I'm all about the big picture. I can't wait to grow this channel and be a staple within the finance YouTube community. And not just YouTube, just finance in general. I appreciate people listening to me and me being able to share this knowledge. So Noah says, what do you think of Tim Sykes? I don't know, man. I mean, he's a salesman first and foremost. I mean, yeah, he may have done well with some, stocks here and there, and I mean, I don't know. I'm not even going to go there, man. I mean, just people like that wear like Gucci shirts and sit in front of Lamborghinis and stuff like that. That's not my style, and that's not my cup of tea. I can easily do that. I have friends that own car dealerships that literally own Lamborghinis. I can ask him to borrow his Lamborghini. My wife's beautiful. I'm not bragging. She just is. She's a beautiful woman, and I can take a picture of me and her in front of the Lamborghini and say, oh, this is my membership group. Sign up. I'll make you 8,000,000% returns. That's not me. So I'm not even going to go there. People like that rub me the wrong way, and that's not my style. So I hope he does well. I wish him the best. And if you're a student of his, I hope you do well as well. But that's not my group. My group is more about value investing and market commentary. So yeah, I don't subscribe to his style. Doug Whitaker, when I was just entering the chat, heard you chat about diabetes, good stocks to get into. Diabetes just keep getting worse and worse. Absolutely. And I think that's because of the sugar epidemic. People love sugar, and it's in everything. If you're eating like an apple, I'm not going to go down this road, but yes, you're absolutely right about that. Jason Klein, what's up, young Jason Klein? Living legend Jason Klein. How you doing, buddy? Oracle versus Microsoft, which is the better stock? So you know me, Whiteboard Finance, fan favorite, Microsoft. I gotta go with Microsoft, man. I love Microsoft. It's always done well. It's treated me well and my viewers well. Jason Klein, you know how Microsoft is doing, man. They're crushing it. They're crushing the cloud. Satya Nadella, the CEO, is absolutely crushing it. So at the end of the day, I gotta go with Microsoft, man. Thank you for the question and thank you for joining, buddy. We gotta catch up soon. Baby, become a better you. Stocks, performance. Okay, I'm not sure what that's referring to. This chat, I'm talking and then I go back and read these chats, so I do apologize if I don't know what you're referring to. Dallas, Canada. How you doing, my friend? Thanks for joining. Everyone go buy stocks. ACB, Aurora, T-God, and Planet. Okay, there you go. Yep, those are the ones we recommended. I don't want to disclose whether I own or don't own any of those because that's what my membership group is for. But yeah, those are definitely 3 solid picks. Lydia Santiago, I think YouTube is like an investment, slow and steady. You're doing great. Thank you so much, Lydia. I appreciate that. Elizabeth Rose, so what if you only had a small chunk of money to invest and I also would like a fast return on that, say under $1,000? Does that ever happen? Yeah, it absolutely happens all the time. If you catch a stock on good news or anything like that, you can definitely catch the upwind on that. Also, people like those like small, biotech or pharma stocks that are just waiting. They're just one FDA patent away from exploding. That's not how I invest. I invest for the long term. So when you say I would like a fast return on that, I mean, go to a casino. You can put your $1,000 on red. You can put it on black. You can double your money, dude. It takes literally one spin of the wheel. But you're also being compensated for that risk. There's a ton of risk with that. So my opinion is just dollar cost average. I know this is boring. I know you don't want to hear this, but dollar cost average. I practice what I preach. Always buy a little bit of each stock month over month. Whether the stock is at $10 or $100, always invest, let's just call it $100 a month in that stock. $100 a month, $100 a month. So whether the stock is down, you're buying 100. Whether it's up, you're buying 100. Whether it's average, you're buying 100. That way it evens out over the long term if you really believe in that stock and that company and you think it's going to do well over time. So I hope that helps. Elvis, can you show a picture of your wife? I think you asked this last week. That's weird, dude. No. Like, I'm not going to show you a picture of my wife. Maybe if she's like in a video or something, great. No, that's weird. Don't ask questions like that, dude. Jason Klein, what up? What up? Larry Massa, small cap value ETFs. Okay, yeah, very good question. Thanks for joining us, Larry. So ultimately, small cap value ETFs, that's kind of like, I don't know how to explain this. Like small cap and value is almost like a conundrum. You know what I mean? It's very difficult to find these kinds of stocks. But yeah, I think small cap ETFs, you need to have a nice little mixture in your portfolio. So I have Vanguard Growth, VUG. I don't necessarily have the small cap ETF in there, but I think it's a good part of your portfolio. Let's see. James McKinney, thoughts on investing in steel companies. So I live in the Rust Belt, so steel is not necessarily my favorite thing because I drive by defunct, steel factories and not factories, but whatever you call the smelting facilities or whatever, on a daily basis here in Cleveland. So yeah, it's just not something that I've looked into. A lot of steel. If you can find a good company out of, India, Brazil, China, the places that are really, messing with that industry, then maybe you can buy a stock. But I wouldn't buy a stock that's necessarily living on a foreign exchange. I would try and invest in those companies through an American security, through an American stock, if that makes sense. Doug is laughing at the casino comment. And that was not meant to poke fun, of Elizabeth. It's just saying like, you can't just say like, hey, I want a quick return. I mean, that's high risk, high reward. That's not investing. That's almost borderline gambling. So I'm just being honest. Yeah, dude, this dude's asking about my wife. Like, really? Like, come on, dude. Like, get real here. Boof Cohen, hey, I've been waiting on this podcast. Hey, what's going on, buddy? Nice to see you, my friend. Thanks for joining us. Casey Israel, this whiteboard finance, not white girls finance. Very well said, sir. Very well said. Aravind Kumar, it takes 5 years to grow Chinese bamboo trees. For 4 years, 9 months, the tree will not get above soil. But after 90 days, it will grow 90 feet tall. So keep going, brother. We are with you. Dude, again, Aravind drops a bomb. He drops a weekly bomb. So if this is your first time here, you guys, this may not be funny to you, but for the regular viewers, Aravind always drops a bomb in the chat section. Thank you so much. But I really appreciate that. So I did not mean to like come off as like, woe is me, my channel isn't growing. That's not me at all. I was just trying to vent some frustration to my closer followers and my closer viewers here. So thank you so much, Aravind. I really appreciate that. Larry says, thanks for the input. My pleasure. Casey says, what stockbroker do you use? So good question. So for my Roth IRA and some trades I used to make when I was younger, I used Vanguard, and I still own some stocks in that portfolio, obviously. What else? 401k is with my my employer. I don't know who handles that. That's where my 401k is at. My Roth IRA is in Vanguard, as I just mentioned. I did delve on Robinhood. I used that, and now I'm on M1 as well. So it's kind of a combination between M1, Robinhood, and Vanguard. So Casey Israel, have you ever day traded? No, I thought about doing it when I was younger, when I was like, late teens, early 20s. I was still in college, and that's when you get these like, these penny stock guys, these Tim Sykeses of the world, and you get these like Forex traders, and you get these day traders with 17 monitors trying to sell you on their course rather than trying to teach you how to trade. So no, I mean, honestly, I was interested in it a little bit, but value investing and making money over the long term has always been my goal. So yeah, thanks for the question. Can you explain a Roth IRA a little bit more? Yeah, absolutely. So a Roth IRA is the easiest way to become a millionaire if you live in the United States of America. All it takes is discipline and consistent investing. That's literally all it is. So I have one stock or one security in my Roth IRA. It's literally a Vanguard Target Retirement Fund. So what a Roth IRA is, just to back up very quickly, it stands for Roth Investment Retirement Account. So Roth means after tax. So once you've already, say for example, you work a job, you make $1,000 a week that you take home after taxes. That $1,000 is known as after-tax money. So you're investing in your Roth with after-tax money. This is money that's already been taxed, okay? So when you get old and you're 62 years old and you retire, the money that's been growing in your Roth IRA, the investments that you've been making with that after-tax money, grows tax-free. So now you're 62, and instead of getting taxed on that, let's just call it $1 million or $800,000, whatever, of gains, you're not going to get taxed on that because you've already paid taxes on those dollars. Does that make sense? You're investing with after-tax money. You don't pay taxes when you go to take it out, okay? So that's why it's powerful. What's in that account is yours, period. Government can't take that unless you take it out before 59 and a half years old, or a bunch of other different little stipulations there. You're also allowed to take out whatever your investments are. So say you've invested 30 grand of your own money and the portfolio is sitting at 50 because of appreciation and because of your stocks going up. You can still take out that $30,000 penalty free because that's your initial principal of after-tax dollars. Does that make sense? So I hope that helped you. So now with the target fund that I was talking about, and I should probably make a video on this, to be honest, but the money that you've already put in there and the target fund that I invest in, it knows when you're going to turn like 62 or 65. So I'm 30. I'm going to be 65 35 years from now. So you add 35 to 2018, whatever that number is. I don't want to do math live and embarrass myself, even though I am pretty good at math. I think that's 2053 or whatever, or 63. Ultimately, that index fund is more aggressive when you're young. It's less aggressive in your middle ages, or like your 40s and 50s, and then it's the least aggressive when you're reaching that retirement age. That way it's preserving all those gains. Does that make sense? So I hope that helps. Alan DeGroat says, you rock, my man. Thank you so much, my friend. I appreciate the kind words. Thank you for joining us. I think this is the first time I'm seeing your name. Casey says, can you fund your IRA account with untaxed money? No, that is just a regular IRA. So yeah, so if you're talking about a Roth IRA, no, you cannot fund a Roth IRA with pre-tax dollars. You can fund a traditional IRA with, pre-tax dollars. Sorry, I'm just reading all these chats. Say, oh, okay, there's a second part to your question with untaxed money from under the table. I mean, so you need to, the way a Roth IRA works is that you need to realize an income. So you can't just like work as a bartender. I used to work as a bartender and I used to work as a valet when I was younger, and that was straight cash, homie. So no, I paid taxes on all that money, okay? You're hearing it here first. Um, so under the table jobs like bartender, valet, drug dealer, whatever, you need to realize an income. So if the government sees that you've been unemployed and you have no job and you're investing and you're maxing out your Roth IRA, they're going to know something is up there. But if you make, 30, 40, 50, 100 grand a year in your regular job, they're not going to blink an eye at you investing $5,500 a year, which is the Roth IRA max. So sorry if this is boring for everyone, but I just wanted to answer this question. So if you have a job and you make money under the table, that's up to you. I'm sure you can fund your account and buy those stocks or those investments in your Roth IRA with untaxed money, under the table money, but I'm not a lawyer. This is not legal advice. You shouldn't do that. James McKinney says, yeah, Lydia, I'm sure you're familiar with Warren Buffett. Bet against hedge fund managers. Yep. Roth explained very nicely. Thank you. I appreciate that. I've been doing this for a long time, you guys. I feel like there's a lot of channels out there that are just very sensational, like, I'm buying this, I'm doing that, blah, 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 blah. And they get, 1 million views and 1 million subscribes, but they don't know what the hell they're talking about. I have a finance degree. I've lived, eat, and breathe finance since I was 18 years old. So yeah, I value my own opinion. Whether that sounds cocky or not, I don't care. I'm confident in my knowledge in finance. Flora Wu says that's similar to tax-free savings account, TFSA in Canada. Exactly. That's what I've heard the acronym in Canada. It's a TFSA. So I've never, I don't live in Canada, but I do, my wife has cousins in Canada. And yes, they've talked about TFSAs in the past. Boof Cone is laughing. Boof Cone, you're a good dude, man. You cracked me up. Casey Israel says, LOL. Finances are never boring. That's true. It's a big part of our lives, and people, they don't really seem to have it as their top priority. Obviously, my top priority is health, family, spending time with loved ones, but money's a big part of that, and it enables a lot of that in life. I like to look at money as quote-unquote freedom units. So my dad's like, why do you always talk about money? I'm like, because they're freedom units, dude. Like, if you have a bunch of freedom units, like in real estate, I worked in commercial real estate, we called it FU money. So, you got these people trying to do a deal. You can just walk away from the deal. You have FU money. You don't need to do the deal. That's a level that I would like to get at some point. Yeah, Doug Whitaker, no money, no honey. That's right, buddy. You got to pay to play. Yeah, so let's go back to a couple of these news pieces here. Let me see if I got anything else good for you guys. So last time we left off, I was on the FinViz. You can see that Apple's down, and this is for the past month. So if you can see the little hand moving around here, this is for the past month, you guys. So WhiteBoard Finance fan favorite up 3.46%. That's Microsoft on the left-hand side of your screen. Amazon is actually down a little bit over the past month. Johnson & Johnson crushing it, up 8.5%. The reason why I like FinViz is because it gives you a really big picture of the market. Just to see what stocks have been doing well over what time period. So I'll leave the screen on this for a second, you guys. I'm just going to take a sip of water here. Excuse me. So we got ICE down here, which is Intercontinental Exchange, up 9%. That's good for a stock priced at $79 a share. Let's see, GE, not the winner chicken dinner. GE's down almost a third, 32% there. Unbelievable what, how the mighty have fallen, Isn't that crazy? It's like you see these big companies that used to dominate so many parts of the industry, and now they're just like almost irrelevant in 2018. Elizabeth says, no, it's not boring at all. There are those of us who need the fundamentals, and that was so weird. Yep. I think you're talking about the dude asking to see a picture of my wife. Like, really, dude? Okay. So PG up 17%. I think that's Procter & Gamble. Yep. What is meant by current ratio? So current ratio is what is known as a liquidity ratio. So I actually work in commercial banking, and I'll put this up on the screen because it's a little bit easier to follow. So the current ratio, it's just a measure of liquidity. So it's assets and liabilities. So let's see. just so you guys can see this. So it's your current assets divided by your current liabilities. This is basically a liquidity ratio that shows, hey, is this company able to pay off their debts? Okay, so I work at a big commercial bank here in Northeast Ohio. I do this day in and day out. I live in these spreadsheets, so I'm really good with these numbers. This ratio is important because, as I mentioned, you take your current assets, which is what the company has, divided by its current liabilities, which is what it owes. So this could be long-term capital debt. It could be, current portion of long-term debt. It could be, loans. It could be notes payable, accounts payable to different companies that they owe money to. So as a bank, the way we look at this is that you say, hey, you have this loan with us for, let's just call it 10 million bucks. Are you able, if your company shut down tomorrow, are you able to pay us back using this collateral? And we typically look at like assets like accounts receivable, inventory, machinery and equipment, things like that. So I sound a lot smarter than I really am, or maybe I'm just not giving myself enough credit. So let's go back to the chat here. Casey says, I live out here in Cali. PG&E fell 16% after the wildfire. I do not know about that. That's interesting. Yeah, I saw Joe Rogan. I follow Joe Rogan on Instagram, and he was posting about the wildfires. Is it really that bad out there? I hope not. I have family in San Diego as well, and friends as well. Aravind, is stock dividend or real estate monthly income, which is better? So it depends. I mean, you can look at it both. I mean, it depends on how often the stock pays the dividend. So it could be monthly, could be quarterly, could be semi-annually, could be annually. Real estate income is typically monthly. So if you have a rental property, that tenant pays you every month, which is better. So there's advantages to both. With real estate, owning real estate, there's a lot of things you can write off in taxes. With the stock dividend, it's set it and forget it. You don't need to deal with, leaky faucets or dirty toilets or clogged up toilets or nasty tenants. So it just depends on what your preference is. Typically, real estate will have a better long-term advantage just because of the taxes, the appreciation of real estate, if there is any. It depends on if you're like in the hood or if you're in a nice suburb. It really depends, obviously. It's all about location. But yeah, it just really depends. Are you self-employed, and if so, what age did you retire from the rat race? Good question. I'm not self-employed. I work for a big commercial bank here in Northeast Ohio. I would like to be, and that's kind of why I'm trying to increase my streams of revenue. So I have rental property, I have dividend stocks, I have appreciation from my stocks, and I have a salary, and I'm also starting a private monthly membership group. So the membership group is going to reveal my own personal portfolio of $100,000+. Every single trade I make, it's going to be daily emails, weekly market commentary, equity research analysis. It's going to be the real deal, you guys. It's finished up right now. I just need to work out some technical issues with sending emails to my members. It's going to be an unbelievable value for the price that I'm charging per month. So I hope I'm planning on retiring from the rat race, if the membership group does well, maybe within the next 5 years. But that membership group is going to live forever. As long as I am breathing and as long as people are getting valuable information from that group, I plan on growing that group to thousands of members. That's my ultimate goal. So Lydia says, I live in Cali too. I feel like there's a lot of fires. Yeah, I've been hearing that. It's crazy. So Shelton Harris, thank you for joining us, Shelton. I think this is the first time I'm seeing your name here. History shows that stocks fall after the midterms but tend to bounce back in the following year. That's very true. So I actually witnessed the opposite. Stocks actually exploded after the midterms, but now they're actually going back down again because of the Fed and interest rates and things like that. Casey says, I think a video on how to budget your money would be good for be a good YouTube video. Yeah, I mean, budgeting money is good. I mean, it's boring, but it's definitely, the discipline that it takes to, increase your wealth over time. So yeah, I will definitely consider doing a video about that. Kumar says, owning a home versus renting a home, which is better? Very good question. So a lot of my friends, they are either renters or they own their own home. So a lot of these people are either straight out of college, they're either in college, they're older with families now. So I just think it depends on where you're at in life. So if you're someone who's changing jobs very frequently, and if you're going to live in that home less than 5 years, then it doesn't make sense to own it because you're going to have taxes. If the water heater breaks, you have to fix it. You have maintenance. Owning a home is a pain in the ass. I'll tell you that straight up, okay? There's a lot of responsibility with owning a home, but at the same time, if you know you're going to live in that home like 6 years or more, if you know you have a solid job, if you know you're not leaving that market, if you know that's where you want to be and raise a family, and if you know that's where you want to be long term, owning a home absolutely trumps renting a home, in my opinion, because after you're done making the payments on the mortgage, you own the home free and clear. Like, yeah, you still have property taxes and utility bills, but at the end of the day, you can still sell that home and realize the value that you've invested in the home. So it's kind of like owning a car versus leasing a car. If you know you're someone that always wants a new car every 3 years and you don't want the headache of maintenance and repairs and liabilities, it makes sense to lease the car. If you're someone who's going to take care of your car and have pride in ownership and really, baby it and take care of it and drive it for, 5, 6, 7, 10, 15 years, then it makes all the sense in the world to own the car, because not only do you not have any more payments, you're utilizing that as a utility to get you from point A to point B, and you can also sell it at the end of the day. So there's that internal rate of return with owning something. So good question, Kumar. Lydia Santiago asked, do you watch Dave Ramsey? He does that. So yeah, I do watch Dave Ramsey. I'm a fan of his. Sometimes he's a little bit too conservative for my blood. Dude, this big falcon just landed on this tree right outside my kitchen. Hold on, let me see if you guys can see. I don't know what you guys can see. Hold on. I don't know if you can see this or if it's too far away. Let me see what you guys can see here. So if you look, that big black dot right above the window, that's a huge freaking bird. That tree is far away. That is insane, you guys. Sorry, I'm digressing. But, sorry, let me get this back on here properly. Dude, that's the size of an American football. Maybe even a rugby ball. That thing is huge. I definitely want to take a picture of that later. Sorry, guys. So Lydia asked, do I watch Dave Ramsey? Yeah, I do. Sometimes he's a little bit too conservative for me. But yeah, he definitely knows his stuff. And if you want to live a healthy financial life, yeah, Dave Ramsey is definitely a good resource and a good channel to watch. So we're coming up on an hour here. Jason Klein. National Geographic. Oh boy, look what we got here. We got a big, I know I got some Australian viewers and they're probably like shaking their head at my terrible Australian accent. We got a big crikey of a, I don't even know Australian slang. But no, it's a falcon, dude. This thing is huge. It is huge. It's awesome. Lydia says you have a nice home. Thank you. This was remodeled by myself, my father, and my my mom. That's the crocodile hunter. Gorgeous. Look at this. Look at this. He's gorgeous. All right, you guys are probably like, all right, that's enough of this guy. So I just want to end on this note, you guys. If you haven't signed up for my free weekly stock pick, I send that out every Friday night. Please consider joining the Informed Investor. It's going to be my membership group. You're going to see my portfolio, and I know I've mentioned it a couple times, but there's going to be a ton of value there just with the equity research reports alone. Those are literally the same reports that hedge fund managers are using, and they're the same reports that fund managers are using on Wall Street. Those things cost literally $1,500 plus. I'm making that investment because I know I'm going to get a good amount of members in the group, and I hope it'll subsidize that cost and hopefully, break even. The Falcon is probably interested about the premium membership. Very good, very good. Touche. So once that group is live, I'll shout it out next week. I'll have a link in the description below. I'm just working out some technical kinks, but it's going to be really fun commentary, and I'm trying to create a community of investors. So it's not just going to be me talking in the microphone and in the camera saying, "Oh, this is what I'm doing," and writing articles, about me. It's going to be about you guys. It's going to be about creating a nice community with a ton of comments. So thank you so much for watching, you guys. These live streams have been so fun. It really keeps me going because you guys are engaged. You ask really good questions. I appreciate you coming here every week. Thank you so much and have a prosperous day, you guys. Thank you.